All right, welcome back and thank you for staying with us on Village Square Africa. Now, so far, banks and forex dealers have been cautioned against reporting inaccurate exchange rates and deliberate attempts to create price distortions by reporting falsified transaction details, among other infractions, just as banks, on the other hand, were also banned from natural hedging, and that is, or in other words, banks should borrow and lend in the same currency, and this is actually to avoid currency mismatch associated with foreign exchange or foreign currency risks. And according to the CBN as well, these adjustments are to align the official and parallel market rates. Now, to discuss further on this, we have with us, joining us, Ebuka Emebina. He's an emerging market financial analyst. And we also have Dr. Boniface Chizia. He is MD, CEO, Big Consultancy Services. Good afternoon, gentlemen, and thank you so much for joining me at this time.
Thank you for having us.
All right, so let me begin with you, Dr. Boniface. Now, how do you perceive the role of the CBN in addressing the economic challenges, looking at the monetary and fiscal policies that have already been explored to stabilize the exchange rate?
Well, I think the role of the central bank is quite spelled out. It is to maintain monetary and price stability. In other words, to maintain, keep inflation under control. So that's essentially the role of a central bank. Of course, you can begin to look at other things the central bank does, bankers, government, and so on. You can add on to all those ones there. But then the central role is to maintain monetary and price stability, essentially.
Just because before we come back to you, Doctor, if you could just, move further, just a little bit away from your device. You're too close to the device. Thank you so much. But now we'll move this same question to you, Ebuka. So please go ahead and share your thoughts on the already, fiscal policies and monetary policies already being explored to stabilize the exchange rate. Where are we? Where are we with all this?
Thank you very much, Darshan. I must say that the current government, has a very difficult task at hand. As Dr. Boniface mentioned, the primary role of a central bank really is price stability and also achieving full employment. Let's not forget that. And when we talk about price stability, we're looking at the level of inflation, the price levels, consumer price index, and all of that. And then also there is the twin leg of looking at both of them and then being able to encourage overall growth and then ensuring that the economy reaches full stability. So it reaches its potential growth level in terms of stability. So looking at the rumbles we're seeing, across the markets, particularly in the exchange rates, of course, we should remember where we are coming from. Looking at the impossible trinity, which I would want to introduce here, saying that it's impossible to have a fixed exchange rate, an open capital account, and independent monetary policy at the same time. So we had that challenge over the last couple of years. This monetary authority, that's the central bank, has tried to resolve that problem. And so looking at the policies which came out yesterday, on net open position for banks, allowing further liberalization for international money transfer operators, all of this is aimed at easing capital flows into the economy and further ensuring that the exchange rate, has some level of stability. So we've seen easing of monetary controls, which have been introduced over time. I believe that the monetary authorities are actually taking extraordinary steps to bring about exchange rate stability. But then let's remember that in achieving this, there are orthodox and unorthodox methods. Part of the orthodox methods, which we all know, is being able to raise, to exercise some form of exchange rate, interest rates, raising interest rates, basically tightening, interest rate tightening. And that would definitely come up, eventually to tackle the inflation crisis, which we mentioned is their primary responsibility. So that will definitely come. But what we are seeing now is, a scramble to make sure that we have exchange rate stability, coming from the floating of the currency,
Okay.
when the administration came in. So it's not a very easy plane to navigate. It's a challenge.
All right, talking about it being easy to navigate, Doctor, now, in addition to what Ebuka has actually said, he did say that the policies introduced yesterday is actually aimed at easing capital flow into the economy. Now, as of Wednesday, the Naira actually fell to 1,520 Naira per dollar. Now, being a businessman yourself, can you tell us the impact of this declining Naira on the overall attractiveness of Nigeria as an investment destination? Because we already know that, we have issues bringing in investment into the country already.
Well, maybe first of all, I think I should make some comments about what's happened with exchange. I think that what's happened is something that was foretold. As soon as we went about it the way we did, we tried to match the market in a way that is ill-advised, and to bring about single digit. This was bound to happen. You have an economy that grossly mismanaged, over the years, and you have also backlog payments. What we had before was a managed float, and that was in place. And to that extent, the citizenry, didn't know much about what's happening, so they got by. But if you look at what's happening now, the inflation is spiked, prices have gone through the roof. There's no commodity in this environment that has not witnessed price increases, and so the ministry index in the land is harsh. But of course, if you are somebody overseas and you're trying to come and invest in Nigeria, there's so many other things besides the rate of exchange that would make you decide, in fact, that Nigeria is an attractive investment destination. Take, for instance, this security we have in the land. Certainly, if I'm a foreign investor and I want to come to Nigeria and I hear that Oba is being killed and kidnappings everywhere and so on and so forth, obviously I will not be attracted. So we have lots of challenges. Now, you take the rate of exchange. If you're a foreign person that wants to come to Nigeria, and you look at, that's why I said initially that central bank primary responsibility is price and exchange stability. Foreign investors that want to come to your country are interested in the stability. So what's happening, the exchange rate and so on and so forth. So what's happening now, no matter how we want to see it, it's not something that an investor will find attractive. So if you are coming and you're not sure the rate you're going to get, you're not sure the rate if you're going out, what you will get, and so on, obviously be very careful, because businessmen can manage risk but not uncertainty. So you have uncertainty. So if you're a businessman coming into Nigeria, you wouldn't want to come because you have lots of backlog. One of the problems we have in this economy is the backlog, delayed remittances, the airlines and so on and so forth. It's done business in this country over the period. And the monies are blocked here because they've not been able to take these monies aside to their own countries. And so I expect them to come. So, there are challenges or something that we have to move quickly. I'm glad that the central bank is going to do what they're doing now, what they should have done since. You can just relax and go to sleep. The Naira will go to 3,000 Naira to $1 before long. None of us believed, in fact, that Naira would ever exchange for 1,000 Naira to $1. But today we're talking of 1,000.
All right, Doctor. I actually feel, I think you're not the only one that actually shares that sentiment of, the CBN having to do this a long time ago and not just now. Now, I would love to ask Ebuka, how soon should we expect results, on the policies issued by CBN yesterday?
Yeah, that's a very interesting and good question. If we look at the market, the market is definitely responding, particularly if you look at the exchange rate of the Naira to the dollar. It's definitely responding to the almost, I'll call it almost like a forced sale for banks. If you look at the impact, look at the initial unification of exchange rates in June, the impact on banks was that a lot of banks declared they had net long foreign currency positions. That means they had more dollars, in their books than what they had collected from depositors. And so you find out that for most of these banks, because they had net long positions, they declared foreign currency revaluation gains. And of course, the central bank had to tell them not to pay out dividends on those monies because it wasn't backed by cash. Yeah, and that was the right thing to do at that time. Now, the central bank still realizes that because these banks have net long open positions, it means that they have significant dollars in place. And then they've practically been forced to sell off those dollars within 24 hours, which is by today. And so it's really interesting to see what impact this would have on the exchange rate. We've seen movements, but not as significant as expected. What I think is eventually the exchange rate, because it's a free float, I believe that it will find its level, relative to other currencies. We'll potentially see arbitrage in other currencies. So if banks have excess dollar holdings, then we would see some level of moving it into other currencies, maybe the pounds. So we should look out for the exchange rate of other more stable currencies to the Naira, and then compare it to the dollar, and then eventually...
Okay, Ebuka, while you're still at this, the CBN also accused traders of manipulating the exchange rate by underreporting transaction rates, and also, some other accusations as well. Now, what difference will selling off excess dollar stocks make? Because this is the, This is the declaration of policy that has actually been given to deposit money banks. What difference will selling off these excess dollars stocks make?
Yes, so in the interim, we would expect that if there is an increase in supply, we would expect the exchange rate to have some level of appreciation. But I do not think that this will be sustained, because it would just be a transitory measure. It will be a short-term measure, which would then bring about try to basically prevent the level of fall or depreciation that we've seen over time. So it will just help to bring some level of stability.
So it's just short-term.
It's transitory, yes. It's not permanent. It's not permanent. Eventually, the currency would definitely find its level and still settle at that level. So I believe it's transitory. Secondly, I need to point out that, for a lot of these banks, they have foreign subsidiaries. And so there's definitely room for geographical arbitrage. So I could move the money offshore. Although the CBN has also required them to report, more extensively on their foreign currency deposits in nostro accounts, in correspondence banks, and all of that. So the CBN is privy to all of this information, and we might see further action. However, I would warn that there could be unintended consequences, with some of these actions, which also have to be taken into consideration.
All right. Let me come back to you, Doctor. Now, still talking about, what difference selling off excess dollar stocks might make. How do you think that the CBN can ensure that the rates accurately reflect market conditions while upholding price formation and also transparency?
Well, let me say that the rates, with respect as the thing is not just what happens now, but it's what happens going forward. So the banks have been in the habit of taking dollar positions and stocking them. So so they keep these monies and then they themselves, they've engaged in speculation as it were, and that is wrong. So I think that look at what's happening now. Look at the consequences, the results we see today. What's important is the effect it's going to have in the near and short term, to what goes on in the market, like the rate at which are exchanges. So I think that we have to get by that mentality, and it's everywhere. And so even if you find traders and so on, that people are stocking dollars everywhere. I take a position saying that until the central bank comes to a place where People cannot predicting what will happen to the exchange rate is not as easy as it is today because it's a one-way thing. You know that the rate of exchange is going to depreciate. So you take the dollars, you stop them. And by the time we get to a stage where we begin to, people, if you take the stock dollars, then you're not careful, you're suffering loss. And then we'll now begin to return some sanity, to the market. So it's not going to be something that will happen. It's not going to be a flash in the pan. It's going to take some time because I take a position that we have to bring back some aspects of demand management. There's no two about it. About something that the banks are them not to take positions of more than 10%. That's aspect of. So if you really want to make the market and liberalize, then you shouldn't be doing that. So I would expect that going forward, we expect that more of that would happen. So we cannot just say throw up the shutters and say, look, market. There's no market in Nigeria. Keep on saying it's not a market. What sort of market is that where we have only one major dominant supplier, which is central bank. A true market, you should have many suppliers and many players within the market. So, but you don't have that. So it's not. You don't have a perfect market. And so to pretend that doing it, even the rates, to the market to determine it, for me, I think it's ill-advised.
Okay. All right. So, well, let me come back to you, Ebuka. Now, we've actually seen some of the negative impacts of the Naira free fall, and the recent one being the Bureau de Change operators shutting down their businesses, even blaming the shutdown on online business transactions and also cryptocurrency. They blame the scarcity of dollars, on cryptocurrency and online transactions. Now, we know that the world is quickly evolving. What's your take on the role of digital currencies, financial technology, and alternative monetary systems, especially for Nigeria?
Yeah, very good question. In terms of the ability to provide a store of value, and when you talk about money, is a means of exchange, is a store of value. Cryptocurrency being a store of value, something which provides an opportunity for trading and all of that, is definitely something we've seen with the number of them, without mentioning names. In terms of cryptocurrency as a means for exchange, we've not really seen that much in terms of the content and being able to fulfill that function. So the BDC operators, referring to that, as part of the impact on that business, is something which still needs to be looked at more holistically.
Okay, so but they also denied hoarding dollars. Do you agree that it's possible for a Bureau de Change operator not to have dollars at all?
Yeah, from what I know, the CBN has not sold currency to the BDC operators for a while, more than a year, and they've been asked to source, from the markets. So most of the trades we've seen has the rate is expressed on the FMDQ, which is a public market, and we've seen that price exposure, largely coming from the banks. So in terms of the BDCs, they've had to largely rely on sourcing from independent private sources. Yeah, so that could also be attributable to their, the business environment for the BDC operators. But of course, Nigeria really needs to just sit down and then look at, if the market is fully liberalized, if it's a free flowing market, then should we sell to particular businesses, at a particular rate? Shouldn't we just completely liberalize the market and allow funds to flow, through a willing buyer, willing seller, on a willing buyer, willing seller basis, which is what we've seen the central bank do of recent. So I believe, if you ask me, that the right steps have been taken. The only missing piece for me, I think we're going through a currency challenge, but I wouldn't call it a currency crisis. I don't see a crisis. The only missing step for me really is, closing down the interest rate tightening, particularly the monetary policy rates. And when we're able to do that with the capital control measures which have opened of recent that we are seeing, then I think we should be on the steps towards being able to attract foreign capital, in the right measure, and then be able to stem the tide. Yeah.
All right, thank you so much, Ebuka. When we come back from the break, we'll definitely be asking this same question to you, Doctor. So let's take a quick one, and then Village Square continues after this break. All right, welcome back, and thank you for staying with us on Village Square Africa. Now, we were actually discussing, the monetary policies already put in place by the CBN to stop the Naira free fall. The Senate has actually summoned the CBN Governor over the Naira free fall, and some policies have also been put in place to stop that from happening as well. And we have on the show with us Ebuka Emebina. He's an emerging market financial analyst, and also Dr. Boniface Chizia. He's the MD, CEO, Big Consultancy Services, and they've been with us from the beginning of the show. Now, let me come back to you, Doctor. Just before we went on the break, Ebuka was talking about how digital currencies, financial technology, and other alternative monetary systems can actually, help in making Naira one of the strongest in the world. Now, what are your thoughts about this? And do you think that these systems would address challenges related to the declining Naira if the federal government decides to tap into it?
Well, let me say that digital currencies is like uncharted waters. It's uncharted waters in Nigeria. The last administration, they want to touch it, with a long pole. They didn't want to touch it because, like they said, they didn't understand it. And so they don't regulate it. So they didn't touch it. Now, the new administration has come, and then they want to up there, want to embrace boundaries of these things, and then they've said they will deal in digital currencies. But I think that if national councils have plugged digital currencies, there are not many. And if my information is right, we don't have any of the developed economies, who have plugged digital currencies. So it's an area that is uncharted waters, and I think it's something that we have to embrace advisedly. So I think that's what to say. I mean, what will give a boost to exchange rate is that there are two factors. Either you increase supply of dollar supply to our economy, or you reduce dollar demand. That's the only way. I have to do that and do it in a consistent manner. Now, without that, you wouldn't. So that's why, for instance, if you don't go take cement comes on stream. I mean, refinery, comes on stream, and then we'll stop importing petroleum products. Then the money we will spend in importing petroleum products cannot go to the market. That would increase supply. So that's the way to go. So, so there are also things, low-hanging fruits in this context, which I think that if materialized, one point for us to have this economy is that we are long on promises and short on implementation. So we've been told Sakura refinery to come on stream, it's ready for production. Okay. Refinery waiting for a long time for that to come on stream and begin to produce. So the only thing now strengthen the Naira sustainable basis is, like I said earlier on, is you have to reduce and then overall increase productivity within the economy. And particularly in the Nigerian economy, you have to do something about corruption. So lots of the money is being stolen. And the way it's been stolen, it's boggles the mind. So you have people have stolen billions of dollars and so on. In mention, and we begin to recover this money quickly. Lots of money is out there. That they try to take overseas and put in banks overseas. Amounts being mentioned. That's happening. So we should begin to quickly get those monies back and put them to the market. But like I said earlier on to you, we have to be careful, with this free market. Free market, fine. They told us initially that as soon as we did this, the investors will start rushing in. So the investor will come in. The environment is so unstable. If an investor, would you go to an area that you can't understand, you can't predict what's going to happen to you the next day, and so on. So it's a tough call. So I think that we have our jobs cut out for us. But what we need to do is, in a consistent manner, to begin to address the challenges we have in the economy. I said like insecurity, kidnapped everywhere. And we're talking about the state police. Why are we dragging our feet? The president state police. I did the paper, I did say that you should give us guns. License guns, liberalize holding of guns, and then let people begin to carry guns. So, be viewed carefully so that not everybody takes it. So they profile and put some conditions, and then don't have any criminal records and so on and so forth. Then you can easily get a gun. You can even find a way to subsidize it, so that how to fight insecurity. So at the sense, the economy is battered, it's started.
All right, Doctor, you mentioned corruption, and I must say that that's one word that I've heard all my life, and that is something that has refused to, that still continues and goes on unabated in the country. Now, still talking about the digital technology and all that, Ebuka, what regulatory frameworks do you think can be established to be able to harness the benefits of digital currencies and financial technology?
Thank you very much, Dashin. I would say that looking at digital currencies, I haven't seen any country in the world where they've been accepted as legal tender. I believe that El Salvador, for example, had made investments, into, I think, Bitcoin. And then if you look at how they are viewed, it's not a legal tender. It's not even if a company, for example, invests in digital currency, it's not seen as cash. It's not seen as a short-term investment. It's just treated from an accounting perspective as an intangible asset. So and what that means really is that changes in the value, would directly impact your income statement in a particular period. So I would think, for example, that if Nigeria wants to take advantage of this, then it has to be looked at very holistically. There was a time when the last central bank governor did launch the Naira, which is more like a centralized blockchain. So compared to what we have around, which are largely decentralized blockchains. So the government really needs to look at what should be our approach to being able to integrate this into our financial system. What are the risks around it, particularly with the exposures to illicit financing, which a number of people have talked about. I know that in the US recently, for example, the Securities and Exchange Commission permitted the trading of Bitcoin ETFs, which are basically like funds, exchange traded funds, which allow you, if you're already holding it, to be able to buy and sell, in a kind of pool of funds. So, but even the impact of that, which would have allowed large wealth managers and high net worth individuals to invest, has not been particularly good if you look at the effect on the prices. So it's an area that requires a lot of study, before it can be fully integrated into the financial system.
All right, Ebuka, some analysts actually think that the dollar supply from the CBN should improve the Naira, or even should be able to improve the Naira or even, stabilize and strengthen the Naira. So some people are actually asking, why can't the CBN control every transaction made in dollars in Nigeria?
Again, I would emphasize that we, as a people, while we look at the exchange rate as a problem, so to say, it's a wrong priority. So the exchange rate is a second order effect. What we should be focused on, include areas, for example, our current account position, which is largely positive. We continue to sell oil and gas. We have favorable current account positions. Where we have a challenge is being able to translate that into meeting the demand and supply needs, in our markets. And if we're trying to tackle some of these, these are age-long problems, which Doctor talked about. Insecurity, it's challenges which have boiled down over time. We've not particularly been productive. We've been susceptible to the Dutch disease over time, relying fully on oil and gas, neglecting more critical and productive sectors of the economy. And so it's a very holistic problem. In coming out of it, there is no quick fix. There's no quick fix. We need to become more productive. We need to manufacture critical resources. We need to, the Dangote refinery, which Doctor talked about, is a positive development. And so essentially what I'm saying is, if you look at from an purely economic perspective, when you have high inflation like we do, we are not hyperinflationary, but we have high inflation. So when you have that, you have to come out of it through higher interest rates, which are a market phenomenon in some respects, but are also influenced by the monetary authorities. And then when you do that, part of those exchange rates, those interest rate rises would then be reflected into the prices of commodities, help to moderate demand for some of those products, and then help to cool the economy. However, the interest rate transmission mechanism is not absolute. It doesn't always have the absolute effect of matching the inflation that you have in your economy. And as a result, the second order effect, which is now the exchange rate, is what you see. So the exchange rate would deteriorate in order to reflect the fact that there's purchasing power parity, which you hope to achieve, and you don't have that, from just increasing your interest rates. And I mentioned earlier that we actually would need to raise interest rates in order to match some of the things we're doing in the market, but it's not a bulletproof solution. Okay. And so that's why you're seeing the effects in the exchange rates. Now, to boil down or to narrow down to some of the solutions, if you look at our money supply, it's grown more than 50% in the last 1 year. Broad money supply in Nigeria is about 78 trillion from about 51 trillion in 2022. So that is part of the problem. You've seen that reflect in real estate prices, the yields on assets, in real assets in Nigeria, have significantly been affected. You've seen significant price appreciation, capital appreciation on real assets. And so the effects of having that, the real elephant in the room really is the fact that we've had significantly higher money supply. And this has been reflected, if you look at it, ways and means over the years. If you look at our external debt, that's the elephant in the room.
All right. Let me.
Yeah.
Okay. So let me just move to Doctor real quick. Now, Dr. Ebuka did say that one of the major fix should be moving our economy to a manufacturing or a production state, and that actually help a lot. Now, talking about international trade obligations, what particular approaches do you think can be employed to enhance export competitiveness and also reduce, how much we import from other countries?
Well, I think that essentially what you needed to do is to improve the environment, so the trade infrastructure, environment, take the power supply. For instance, as we speak now, I'm a generator. And you will think of somebody who is a big manufacturer, have to buy, look at the cost of diesel, so on and so forth. So, those are things we decide, mentioned earlier, would impact your export competitiveness. Besides the fact that, quality assurance is also something that you mustn't take for granted. So Nigerians produce things and then we cut corners because the values bring to the table and then go overseas, and the qualities are not what it should be. And so I remember AGOA, when the Americans tried to send exports to America, conditions, the terms and conditions. So if you needed to export, and you check what's happening too, in terms of Japa, people are going overseas and so on. So we have brain drain. People are going overseas, and we're losing capacity. So all these are issues. We expect that by the time we begin to correct things, and begin to get recover, maybe a short walk. So that will take some time. By the time we begin to do this, that things will begin to normalize. Like I said, it's not those happen. Right? So export competitiveness, being an attractive destination, is a whole lot. At the time, ease of doing business during the last administration, the committee was set up, ease of doing business. So they're coming to Nigeria. What's the experience at the airport? What about the security proposal? You can't. The checkpoints, you can't. You have to provide the security. So I think we talked about bribery. So at every point, somebody wants to do something for you, money.
All right. Thank you, Doctor, for that. Now, just before we go, Ebuka, can you tell us if there are any unexpected opportunities? Because, when you talk about the Naira free fall, the declining Naira, people seem to come up with so much negative, results from that. Are there any positive, or unexpected opportunities that might arise from the declining Naira?
Definitely. From a fiscal perspective, when you have a devaluation, automatically, if you are export driven, it means that your produce becomes cheaper in other countries. And so with the AFCFTA, there's an opportunity for Nigerian producers to easily take advantage and increasingly export to other West African countries. And that definitely gives them an opportunity to bring in cheaper goods, expand their quantity supplied, and all of that. Secondly, is the fact that with the devaluation, which we've seen of recent, there was one in the last 2-3 days, we're looking at an exchange rate movement of at least 250% since June last year. What this means is that the share of FAC, accruing or attributable to states, has significantly improved. And so we expect to see larger shares, at FAC for states at the end of every month, as we've done. And so what that means is, there's an opportunity for increased wages, from the wage side for workers. We expect to see increased agitation for that, because right now what it means is that with the level of inflation we have, the real wage of workers is significantly deteriorated. Okay. And so since states have more income from the devaluation of the currency, then we expect them to be able to give back a portion of that increase to the workers. Then also, I would say that from a banking sector perspective, looking at the recent regulations which requires banks to give out to almost like a forced sale within 24 hours. Of course, for banks which have net long open positions, which I talked about earlier, definitely they would they would definitely, the impact on their shareholders' funds and their capital adequacy ratios means that the Nigerian banks are in a very sound footing.
Yes,
and that we expect that to continue. And then, of course, from the regulatory perspective, there's an opportunity to raise the minimum capital, looking at it in dollar terms.
All
So
right.
I expect to see some of that in the next few months. Thank you.
All right. Well, thank you so much, gentlemen, for joining me on Village Square Africa today and speaking at length about this. We just spoke with Ebuka Emebina, emerging market financial analyst, Dr. Boniface Chizier, his MD, CEO, Big Consultancy Services. We appreciate you for your time, gentlemen.
Thank you
for having us.
Well, and with that, it's a wrap on Village Square Africa. Thank you so much for tuning in. I remain Darshan Usman. Have a wonderful day.